It's a review process by a committee. That's different from, say, it being up to the prerogative of the president. Treasury Secretary Mnuchin also told us that it will prohibit or could prohibit the transference of technology through joint ventures. As you know, sometimes companies, they may get turned down through the CFIUS process, but they go create a joint venture on the other side, and that would ostensibly be prohibited through this process. I think there's some, what's the right way to put this? There's some happiness out there in the market that Navarro and Lighthizer are not entirely driving the trade train on their own, that it's being run by also Mnuchin and Hassett and Kudlow seem to be having, or cooler heads are prevailing on this. There is, however, a cost of protection. Take a look at Chinese foreign direct investment in the United States over the past several years. You can see it absolutely plummeted over the past several years right there. The first half of 2018 down some 90%. This is the U.S. dollar amount. And then you look again at the number of transactions, and that's come down as well. Look, Chinese buy U.S. bonds. They hold U.S. dollars in part because they feel like they have a claim on U.S. assets. If we were to reduce that amount or make that conversion more difficult, it would be less value to the assets. U.S. firms may face similar restrictions on the other side. So, Carl, there is a cost to what we call protection.
Interesting, Steve. Meanwhile, the Journal does a piece today looking at other options China has. One, they argue, is simply taking a seat in Silicon Valley and starting to hire entrepreneurs and engineers at scale.
You know, the other thing, Carl, is there is a great tide that is running right now, which is the speed of transfer of technology. I was at a seminar not too long ago and saw, you know, the time it took for the steam engine or the electric motor to move around the world, and now compare that with the speed with which an app moves around the world. And there are different ways to do that. Both theft, I think, is the smallest piece of it. I think just the market incentive is the biggest piece of it. And then you had an interesting interview with Larry Summers this morning, who said, look, the Chinese are doing this through basic education, through basic funding of sciences, and the U.S. has pulled back in those areas. U.S. remains the leader, but China's catching up fast on these things in terms of growing their own when it comes to their own technology.
Steve, as you know, over the past decade especially, whether it's been HP, Intel, Qualcomm, very often when these big U.S. tech companies want to move into China, sort of as a condition, China tends to demand some sort of joint venture or multi-million-dollar, sometimes $100 million or more investment in Chinese startups and their ecosystem. Some of these companies, Intel and Qualcomm in particular, probably have technology that falls into this arena of strategic importance that CFIUS is going to look at. Are we going to end up with a situation where China's saying, if you want access to our market, we need you to do this and have this kind of joint venture, and CFIUS might say, hold on, you can't do that.
Do it. May well. Look, John, you know this better than I do, but managing the differential between, I forget the number, is it $1.5 billion Chinese and 300 million otherwise very wealthy Americans is one of the biggest stories of our day. The idea that U.S. per capita, U.S. GDP as a share of the world has come down from, call it 25 to around 20. China has come up. They're getting wealthier. They can make that demand of companies. And if we want to play over there, by the way, John, it's a way that U.S. companies more often do business, is by setting up shop over there rather than exporting from the U.S. If you look at U.S. foreign affiliate sales, they're many times what U.S. exports are, because what a company typically does that goes over there, it's more efficient to do that way. Maybe now with the tax regime, some of that is more equalized, but it's still going to be a situation where American companies go over there and they build over there, and you're right, they have to sometimes take it, go under the local laws that make them provide some of that technology, and it's going to be you're going to miss out if you don't do it, or you got to do it and transfer that technology in that regard.
Finally, Steve, in terms of retribution actions that Chinese could do, people talk about holding up M&A. They talk about adding inspections to various sectors over there, telling their citizens to avoid certain U.S. products. Do economists take that seriously?
Absolutely they do. You know, the whole retaliation thing is what really makes this bad, because any number the Trump administration comes up with, well, you kind of double that. I mean, look at what Harley-Davidson's doing. They're doing this not in the first instance because of tariffs from the Trump administration. These are the retaliations by the Trump administration. So that is absolutely key, the total amount that is put on in terms of tariffs. And I will say this, Carl, there's good news in this announcement this morning. It tells to me that cooler heads are prevailing. You might do something like this if what you wanted to do was set a better stage for talking with the Chinese. That's been the regime of the past two administrations, was to elevate the importance of the total relationship with China. And I think it's ultimately yielded excellent economic results for both countries. The president chooses to emphasize the negative, of which there are some. But I think that guys like Mnuchin want to sit down with the Chinese, and they really want to make a deal.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.